Hi there, welcome to Kneppyinvests. I wasn't really planning on doing a March quarter update for Crowd Media, the focus of today's video, even though the company is operating cash flow positive. In my opinion, this company is low quality with low quality management with significant red flags. However, a few days ago, like the 22nd or 23rd of June, the company did release a really interesting announcement in regards to a placement the company had put out. And I found that announcement really intriguing in terms of how we determine whether management of a company is either great, good, bad, or even terrible. And this particular announcement, I think, could persuade you in deciding the quality of Crowd Media's management. And that will become apparent when I talk about this massive red flag in regards to Crowd Media. So because of that announcement a few days ago, I've decided to do a March quarter update just to have a closer look at Crowd Media. There are some investors in this company that are excited about the future of this company simply because of the space they're in. They do use a few buzzwords on their website, and I do think this company has a fair bit of a potential. But this company has had a fair bit of potential over the past 7 years, but they've never realized that potential. And there's no reason to think they'll be able to do that over the next 5 to 10 years. Before we have a look at Crowd Media's March quarter Appendix 4C and have a look at those three massive red flags I have found with this business, what exactly does Crowd Media do? Now, I actually know Crowd Media as Crowd Mobile. They haven't changed their ticker name. And they did list on the ASX about 2015 or 16. And back then, Crowd Mobile was all about questions and answers. So if you had a question, you went to the Crowd Mobile platform, you asked a question on that platform, and then some expert was able to answer that question. So that was their business model back then. They also made a fairly significant acquisition that completely failed. I forget exactly what the acquisition was, but that's no longer in their business model. But if we go to their website right now, this is their homepage. It does look quite fascinating. And they're talking about humanizing user interaction with visual conversational AI. So quite a few buzzwords you'll see in their homepage. AI is one of those buzzwords. And this homepage is quite long. So a lot of information here. And again, a lot of buzzwords in regards to AI, interconnectivity. So for instance, their AI-powered talking head platform is supposedly going to revolutionize the current standard of text-only chatbots by offering a fully immersive experience for customers across sight, sound, and interconnectivity for commercial applications. So it sounds really good, but whether they can put all this buzz into practice remains to be seen at this point in time, with real life like representatives that will lead to faster and meaningful conversions. Not sure exactly what that means. So they do have that platform that is called Talking Head. And if you do read through any of the Crowd Mobile's or Crowd Media's announcements, they do talk a lot about Talking Head. So it seems like this platform is their future. Whether it does succeed remains to be seen. As I've already mentioned before, this company has been around for a while and they really haven't succeeded thus far. So this is definitely a high risk sort of company, but there is a fair bit of rewards. If they are able to succeed in what they want to do, potentially this is going to be a much bigger company. In the era of smart devices and FaceTiming, the need of a humane touch is growing exponentially. That might be true for some people, but I don't really care about that sort of thing. I don't really care about any sort of human touch whatsoever. That's just me. I'm an extreme introvert. I don't need people to talk to every single day. In fact, a successful day for me is when I don't have to interact with a single person. Crowd Media was founded in 2009, listed on the ASX in January 2015. So they've been listed as an ASX company for over 7 years now, via another company called Q Limited. I can't remember that company at all. Current CEO hasn't been around for too long, only been in that role since September 2021, Iden Shamorak. Now, if I remember correctly, Crowd Media might be based in Denmark, Belgium, Netherlands, one of those sort of companies. So it seems like maybe Iden Shamorak could be a native to one of those companies. The shareholder and one of the largest shareholders and the founder of this company is Dominic Carosa. He has a 4.5% stake in the company. So a little bit of skin in the game. I also think he's also a part of the board. And one of the other largest shareholders is also a part of the board. He might be the executive chairman. Current market cap of Crown Media is a fairly low, 13.7 million. That's a share price of 1.9 cents. Now, the share price has taken a bit of a tumble in recent weeks, and there is a reason behind that. And I'll talk about that reason during this video. And the ticker for Crown Media hasn't changed since 2015. It is CM8. Before we have a look at the most recent March quarter results, I just want to go back 1 year ago just to see how this company has progressed over the past year. And even though the company did receive $3.1 million of receipts and $438,000 in other, I don't know where that other comes from, they didn't provide any details. The company was operating cash flow positive by $319,000. I probably would exclude that other because I have no idea what it is. And if you do exclude the other, the company was not operating cash flow positive in this particular quarter. Now, because Crown Media, in my opinion, is low quality, with low quality management, more than likely I would have just ignored this particular Appendix 4C. And I think I absolutely did ignore this Appendix 4C. I don't follow this company all too closely and haven't followed it all too closely for about 3 or 4 years. Now, during the quarter, they did a $1.6 million capital raising and also received $766,000 through the exercise of options. And even though they did spend $872,000 on investments, cash on hand actually did grow from $3 million to $4.2 million. So let's have a look. Now let's have a look at the most recent March quarter just to see how this company has progressed over the past year. As we take a look at the March quarter results for financial year 22, the first significant red flag really pops up, and that is the significant decrease in receipts from 1 year ago. Receipts have dropped from well over 3 million to 1.76 million. Now, in saying that, receipts have dropped, but so has spending, and spending has dropped at a probably quicker rate, slightly quicker rate than the drop in receipts. And because of that, the company was still operating cash flow positive, albeit on a low amount, $19,000. Yes, there are probably some viewers of this channel laughing at that amount, but it is a positive amount. I'd rather a company be operating cash flow positive by $19,000 than operating cash flow negative by $3 million. However, in saying all that again, they did spend a little bit of money in financing and investing activities, which means that cash on hand fell from 1.7 million to 1.3 million. And whenever you see the cash on hand dropping to fairly low amounts, and $1.3 million is getting towards fairly low amounts, you have to be aware that the company will more than likely do a capital raising in the future. And that's exactly what Crown Media has done. They also mentioned in the commentary ongoing profitability delivered by the mobile subscription division. I'm not sure exactly what that means. Optimization measures and new processes initiated to drive long-term revenue growth. At this point in time, there is no revenue growth for Crown Media. In fact, it's going backwards through time. You're able to see that when we look at the cash receipts history. Now, Crown Media haven't been supplying Appendix 4Cs since 2015. In fact, they've only provided 7 Appendix 4Cs. More than likely, the ASX decided they need to provide this information to the investors of the company, to the market as a whole. And as we look back over the past 7 quarters, receipts are on the downward trajectory, decreasing from a high of $4 million in the December quarter 2020 to a low of $1.5 million in the September quarter 2021. However, receipts have been climbing the last few quarters, albeit not much, from 1.5 million to 1.8 million. So the receipts going in exactly the wrong way that I would like to see. I prefer to see receipts growing through time. So this is definitely the first red flag when it comes to Crown Media. Now to the red flag that really was a motivating force for me doing this video. Not this particular announcement, but this is where the story started to unfold or begin. So back on the 30th of May, 2022, and just remember, in the previous slide, or the previous 2 slides ago, the cash on hand for this company was going down. So the company was going to have to do a capital raising eventually to increase the cash on hand. And they made this particular announcement on the 30th of May, 2022 to raise $2.1 million. Now, this point in the highlight section is the most important point. Directors participating to take up $300,000 subject to shareholder approval. So as we move forward, it'll become quite apparent why this is a red flag, in my opinion, and how we can judge the quality of the management of crowd media. The other important point here is a price. The new shares will be issued at 3 cents. When this announcement was made on the 30th of May 2022, the share price was at 3.6 cents, which meant new shares were at a 20% discount from where the share price was at that point in time, and the funds would be used for the development of the talking head technology, sales and marketing, and working capital. Now, if I remember correctly, this placement was to sophisticated investors, that sort of thing, and directors, but shareholders of the company were not able to partake in any capital raising. And I actually don't agree with that. I think if a company is raising money at a discount, at a significant discount, shareholders should be given the opportunity to buy shares at a cheaper price. So that is one slight red flag I do have in regards to this particular capital raising, this particular placement. Unfortunately, the market didn't really like this particular announcement from the company. In fact, on the day they released this announcement on the 30th of May, share price dropped 11 cents from 3.6 cents to 3.2 cents. That's okay, because the capital raising, the new shares will be issued at 3 cents. But over the next 6 trading days, something unusual happened. The shares just kept on dropping. On the 31st of May, they dropped 3%. But even though shares did rise on the 1st of June, 3%, they fell by 9.4% on the 2nd of June. In fact, the share price closed at 2.9 cents. So that share price is lower than what the shares were going to be issued in the placement. And then on the 6th of June, the share price dropped another 10% and closed that day at 2.6 cents. So at this point in time, it was better off to buy shares in the company at 2.6 cents than to take part in the capital raising, because you'll be getting those shares at 3 cents. So there were some significant problems when it comes to this placement. And in fact, any shareholders who were complaining that they couldn't take opportunity to buy shares at a cheaper price, well, they could now buy shares at a significantly cheaper price on the market. And it just kept getting worse for crowd media over the next few weeks. In fact, the share price dropped from 2.6 cents on the 7th of June all the way to a low of 2 cents on the 21st and 22nd of June. In fact, on the 23rd of June, the share price closed at 2.1 cents. So instead of that placement being at a discount to the share price, the placement was now at a significant premium to the share price. And then what happened next should not be a shock to anyone, particularly for those who know this company's management to be fairly low quality. So what happened next when it comes to this particular placement? And then on the 24th of June at about 8:40 a.m., the market received this announcement from the company. So even though it says the 23rd of June, 2022, this announcement was released at about 8:40 a.m. It was in regards to the withdrawal of director participation in the placement. They made some excuses, some reasons why. For instance, they said, following direct approaches and subsequent consultation with large shareholders that indicate a lack of support, the directors and their related parties have regrettably withdrawn their intention to participate in the capital raising. Most of that is absolutely BS, in my opinion. The only reason they have withdrawn their intention to participate in the capital raising is because the placement is now at a premium to the share price, a 30% premium. If the placement was to a discount to the share price, they would not have withdrawn their intention to participate in the capital raising. And in my opinion, this is a bad light on management. And the reason why I think the management of this company is really low quality. They will have to show me that they are high quality management in the future. At this point in time, one of the reasons I'm not following this company all too closely is because of the quality of management. And this is, I think, really good proof that the quality of management of this company is of low standard. And the market did not like this announcement. Share price dropped 10%. In fact, at one point in time, the share price was down almost 20%, down, I think it got to a low of 1.7 cents. So now directors can buy some shares on market at 1.9 cents, a significant discount to the placement. So it remains to be seen if we will see directors buy in at a lower price. I think if they do start buying en masse, that would be a good sign. So wait and see if directors do start buying shares in crowd media. If they don't, that will be an even more significant red flag, in my opinion. Another massive red flag when it comes to crowd media is just the chart. Absolutely ugly looking chart. So this is the weekly chart going back to when they listed on the ASX or backdoored on the ASX way back in January 2015. There was a little bit of hype in this company during 2015, just after they did list or backdoor their way onto the ASX. In fact, the share price reached a high about 36 cents in the middle of 2015. There was also a really good year, or Crown Media had a really good year in 2017. Share price tripled from 8 cents to 24 cents. But if you take away those periods where there was a little bit of hype, the share price of this company has been consistently falling. And we have seen the share price reach a low of 1 cent back in 2019 and then again in 2020. It looks like the share price is heading towards that level again. In fact, the share price has decreased from 5 cents to 1.9 cents since the beginning of this year. And because of the negative sentiment in the company, because the share price moving a fair bit lower over the past few months, I think that 1 cent level, that support level for this company is under threat over the next few months. So at this point in time, I do consider Crown Media to be a low quality company, and the company will have to prove something to me over the next few years. And one of the ways they can prove something to me is if this platform, the Talking Heads platform, can take off, can find traction. In the way we see it's gaining traction is an increase in cash receipts, an increase in revenue over time. And the other problem I have with this company is the quality of management. I don't think this is a high quality management team at this point in time. Probably should give the new CEO a bit of leeway because it hasn't been that role for too long. But in saying all that, I have to see some proof that this is a high quality management, and they haven't shown me that quite yet. That's all I have for this video on Crown Media. If you completely disagree with me that this company is low quality and the management is low quality, I'd love to hear from you. I'd love to hear different thoughts, because that's how we grow as investors, is to take on different opinions and digest those different opinions. Don't just ignore them, digest them, try to understand those different opinions, because again, that's how we grow as investors. That's how we become better thinkers, better investors, is to look at different sides of the story. So if you do have a different thoughts or any sort of different thoughts about this company, I'd love to hear from you. Leave it in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.